Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. So, looking at the bank stocks, it clearly tells me that capitulation has not even entered just yet. All right, we haven't seen true capitulation in the markets. You're hardly getting the sell-offs in the equity markets. It's having a tough time. You're getting equity markets still being bought up. You're hearing the implosions of the bank stocks. You're getting people buying the dip on the bank stocks, right? You're hearing US Janet Yellen, the government, the Fed, don't worry, they're going to make sure that everything is safe, and they're going to backstop anything negative. They're going to guarantee that you're going to get your money back, and they're going to make everything fine, right? So all of this is still creating an optimistic view in the markets for the bulls to say that, hey, it's not really that bad. It's not like 2008. We're getting some liquidity in the markets. The government will always save us. The Fed will always save us. So buy the dip. These bank stocks that are crashing, you see them crash 60, 70%, and then all of a sudden, next day you hear that the stock is up 30%, right? And this is a sign that capitulation is not here yet. What capitulation will really look like is when people buy the dip, markets go up, and then we get another round of big selling in the markets. So, in other words, what I'm saying is any rally that you're seeing in the markets, this would be considered a bull trap. A bull trap where the markets move up, it looks like everything's fine. We heard, that the government and the Fed's going to save us. And then eventually some other new negative news comes in, which causes the stock market to all of a sudden plunge. And when they plunge and make a new low, then sure, it will cause panic in the markets that, hey, I thought this was the bottom, but a new bottom is being formed. So, okay, if this is the new bottom, then let's go ahead, buy the dip again, buy the dip again. Keep buying the dip. So if people keep buying the dip and you keep getting a new low and people are trying to catch a falling knife, eventually they're going to get hurt, and then eventually you're going to see true capitulation, where then there will be hardly of those buyers that you're seeing today, right? When you hear crypto, Bitcoin, when you hear Dogecoin, JPEGs, NFTs, Carvana, any of these meme stocks, meme coins, when they rally in one day like 10%, 20, 30%, that just tells you that these buyers are still in the market. In order for this to truly be sealed and done, and in my opinion, for the markets to then move on and say, okay, the bottom's finally in, is you need that capitulation. You need that burnout, that where traders have been exhausted and they're all out of money, that they can't buy the dip anymore, and there's so much fear that nobody's touching anything. And until then, when there's so much fear in the markets that people just throw in the towel and they've just given up, that's when the true bottom is formed, and that's when you can get back to a healthy market, and that's when you can get back to liquidity being pumped in the right way, the real way, rather than right now where people are saying, hey, it's over and don't worry, buy the dip and don't worry about these rate hikes. Don't worry what happened in 2022 with all the rate hikes that happened. Don't worry about the bank failures. Oh, the government will save us. Oh, don't worry about inflation, 6%. It's going to come down, or we'll live with it. Blah, 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 blah. Excuses, excuses, excuses. Buy the dip. And then if you buy the dip and you're caught on the wrong side, and then true panic happens, just like in 2008, which led to finally the capitulation after bottomed out in 2009. Same thing in 2000, 2001, finally bottomed out, right? In March of 2020, same thing. You had a massive sell-off, but that was more. I would say that was a little bit different. You had a V-shaped recovery really quickly, and I think the markets are expecting the same thing like COVID, a quick V-shape. I think everybody forget, they forget about what has happened in history. Everybody, also forgot that scenario in 2020 was a self-induced recession. It was created on purpose from the governments, right? Because they shut down the whole economy. So yeah, you're going to get really bad earnings. You need to reprice things. You don't know what's happening. There's this virus. Is this the end of the world? Fear, fear, fear. Then you realize, oh man, the Fed is pumping all this money, buy the dip, and it reversed. But in 2008, 2001, 1970s, 1980s, different story there. It was more of a longer sell-off that took its time, longer recession, and eventually people got tired, threw in the towel, fear was at maximum levels, people didn't know where things would be, and then capitulation happened, and then the reversal. So how I look at all this with the dip buyers still in the markets, I don't think this is capitulation. I don't think that we're done here until we get more information about where this inflation's going, and I think until people throw in the towel is really what I'm trying to say. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.